Big money, big night. Channel partner and investment advisor meet at SPR City Market of India, Perambur, 10th of July, 4:30 p.m. Call 73581 11999.
ஒரே ஒரு 5 லிட்டர் இதய மந்த்ரா கடல் எண்ணெய் பேக் ஒரு மாசம் முழுசுக்கும் அத்தனை சமையல முடிச்சு விடலாம். இதய மந்த்ரா.
RBI and also with the member of the CBDT, and much before I came in, I think you had a larger house exchange and discussion among yourselves, all of which will be the basis on which we'll be studying the situation in the days to come and possibly addressing many of the concerns which are important at the stage in which India is positioned. The message is actually for making every financial institution be irrespective of their size, the larger, the small, the medium, the metropolitan based, the rural based, the far-flung area based. Every one of the financial institution will have to be prepped for growth, is my approach. India's growth requirements and the aspirations of Indian people and their requirements require a very robust financial ecosystem consisting of large banks, medium-sized banks, rural banks, not just brick and mortar banks, but also agents, but also mechanized ways or electronic ways or digital ways of communicating and transacting. So every aspect of reaching the last man or woman who needs that financial inclusion has to be now prepped up and speeded up. So today's NBFC conclave is not so much for addressing only the problems that NBFCs face. The problems that NBFCs and the challenges that the NBFCs are talking about are actually the challenges for our growth. They are the challenges which the ground is telling the financial institution, however small, are present in those far-flung areas, clearly feeling the nerves and then communicating to me. So I would think it's not an NBFC symposium. It's much, much more than that. It's a symposium through which we are understanding the financial realities in the ground, the financial expectations in the ground, and as the agents who are going to have to provide that and service that, the voice of the NBFCs. So, in that sense, being an important component of the financial system, you reach across the vast cross sections of the population and diverse geographies. So, and then you complement also the traditional banking system. The NBFCs emerge as an important source of credit for segments that have historically been underserved or excluded. And that is where when you come and talk about issues, they speak in diverse realities. So you're not sort of telling the same story across this country. Larger issues probably be the same, but specific area problems also get reflected. So, and what is actually the ground where you are and where you are performing? The gross loan advances by NBFCs have actually grown significantly. It was about 24 lakh crore immediately after the COVID 2021 March. Today it is 48 lakh crores as of 2025 March. The 4 years post-COVID has shown remarkable growth trajectory of the NBFCs. And those have been the challenging years for The NBFCs on very many regulatory compliance issues, and also the modus. Co-lending, banks providing money, not sufficiently providing money, you having to go to the market, but can you go to the market? On what strength do you go to the market? And so on. So despite these challenges, which are operational, you have shown remarkable agility that 24 lakh crores has gone to 48 lakh crores in a matter of 4 years. And that itself tells you that the story of India's growth is where you are. And that's where we need to take this whole symposium in all its seriousness, for action to emanate from it. From what emerges from here, we need further action, so that the action is strengthening where you are. So somebody did refer, 9,000 registered entities are the NBFCs in India. They range from large infrastructure lenders to niche players in microfinance and asset-backed lending. So together, you fulfill a range of credit needs and are the first point of contact for crores of citizens and small businesses that are seeking financial empowerment. So NBFCs have actually emerged as the preferred option for numerous underserved sectors, so they can't be waiting till such a time when a large scheduled commercial bank reaches them, but they are already with you, they are already seeking financial services from you. And that is being served, and that's why the progression from 24 lakh crores to 48 lakh crores is because you've adopted very innovative credit delivery models. You've also provided accessible and customer-friendly credit solutions. So despite the odd reports that might emerge in the papers, largely your customer-friendly credit solutions have actually kept the customers with you, and that's where you have to have greater trust with the customer and move forward. So over the past decade, credit growth by NBFCs has consistently outpaced that of the banks. And I'm happy to say that in front of several of our public sector banks chiefs who are all seated here, you have actually kept the pace faster than what our big banks are doing. I'm not sure the secretary is happy hearing it, but he knows it. He's given me the input for saying some of the things. But I would also want to ask him, how are we going to have your performance continue and better, and your performance be as an emulative model for the public sector large banks as well? Imagine, the story is now you're the emulating point which they have to take up, and I'm sure the secretary's got the message there. So NBFC's fundamentals has been underpinned by strong capital buffers, robust interest margins, and earnings and low levels of impairment. I heard from the interaction that I had just some time ago, from y'all, through y'all, that even during COVID, the guarantee scheme-based lending that happened has not resulted in major failures. And that was also repeatedly proved with data where the invoking of the credit guarantee for the ECLGS schemes has been very much in single digit. And that proves that even during COVID and a stressed period like that, Indian borrowers from the bank have managed to perform and keep up the commitments given to the money lending institutions. So that actually gives us a very healthy base on which we can work. Asset quality has shown steady recovery, particularly since the pandemic, with NBFC sector's gross NPAs having steadily declined from 6.4% in March 2021 to reach the current level of 3% in March 2025. Profitability has also improved, with return on assets improving from 1.11% in March 2021 to to 2.4% in March 2025. So, actually, an important observation which the IMF has made sometime in February 2025, much before the spring session of the World Bank and IMF, is worth recalling. And I quote, India's financial system has become more resilient and diverse, driven by rapid economic growth. The system recovered from the distress episodes of the 2010s and withstood the pandemic well. NBFIs, as they call NBFCs, and market financing have grown, making the financial system more diverse and interconnected, unquote. But in a different place in the same report, it also says, stress tests show that the main lending sectors are broadly resilient to macro-financial shocks, despite some weak tails. Bank and NBFCs have sufficient aggregate capital to support moderate lending even in severe macro-financial scenarios. They have captured your strength in very clear terms. So, if our compliances and if our regulatory expectations are fulfilled without adventurism, we will be actually contributing towards growth and equally strengthening the very framework of the NBFCs. So there can always be one odd black sheep, but that hits the very profile of the NBFCs. And that's where we have to be doubly conscious that the regulators are here to strengthen us. Compliances are there for us to be disciplined rather than be adventurous and the profile of the sector itself get affected. So we need to have governance, risk management and customer protection as part of our code, our beliefs, our ethics. And that is why it is important that NBFCs constantly look at that aspect as well. So if our journey towards 2047 Vikasit Bharat will have to happen, and the global scenario, global economic landscape is increasingly giving us the message that we need to have continuous vigilance and adaptation. We have to keep changing our ways. We have to keep refining our ways. But we have to be aligned with the expectation of the regulator. As the model of NBFCs matures in India, I would think the focus on risk management should increase. We don't need to wait for the regulator to specify it in A, B, C forms. You know what's the risk in the ground. You have to be ready to make sure that you are firewalling yourself so that you're not exposing yourselves too much to the risks that are prevailing, especially during periods of market stress or liquidity shocks. Risk-taking must be well planned. I'm not asking you to be overcautious that you wouldn't do any business at all. But it has to be well planned and data-driven and never beyond the absorption capacity of the entity concerned. It should never be beyond your absorption capacity. Liquidity and credit risks must be rigorously assessed and managed. And that's, I would think, the core business of saving and lending, keeping money with you and lending it for public cause. You should have internal controls, should ensure oversight, particularly on asset liability mismatches, nature and tenor of funding, and also the sources of funding, above all concentration risks. I think most often concentration risk is underestimated. I would want you all to give enough time and focus on that. So a sustainable business model must be the cornerstone of the sector's growth, and it should have a growth pattern which is going to be on sustainable credit landscape. Again, one more important line would be financial inclusion cannot be used as a pretext for financial exploitation. I say this consciously because we get repeatedly reports of how financial inclusion intent of the government, while getting executed in the ground, has brought in, I would believe, inadvertently, an exploitation element which has to be carefully weeded out. We do not want anybody having a sense of caution thinking that exploitation is justifiable when you're doing inclusion. It's not. Please go back with a clear message that financial exploitation in the name of inclusion is unacceptable. Lending should be based on genuine needs and repayment capacity of the customers, and loans should not be aggressively marketed or pushed. I hope, because you're at the last mile, these messages are going to be seriously taken, because that's what is going to be the underlying strength of NBFCs in the years to come. Interest rates should be reasonable. This I say despite you having to borrow at some highly rates which you would otherwise wish to be far lower, but you should work together with the scheduled commercial banks, talk to them, see how best you can raise revenue, and where the banks themselves are unable to give you. Today, for instance, I was just reviewing and looking at the data which was coming before me to see how the public sector banks on priority sector lending in the last few years, I've not completed that sentence, but I'm saying something else more here. In the last few years, I have been closely monitoring how public priority sector lending activities for the banks are going on. Every year you have substantial amount left behind, which then gets repooled to NABARDs of the world and SIDBIs of the world, which of course they will take it up and they will further do something more. But I can't see how, despite banks' priority sector messages given to them, they are left with so much left behind. Is there a role that you can actively play through the NBFCs? You and the NBFCs together, because they are there at the last mile. Can the priority sector lending performance of the banks be improved if you co-opt the NBFCs as your partners in this? The RBI can also devise and give you advice on how best it can be effectively done without upsetting any prudential established framework. And the reason why I have brought this is, in this conversation, is that number is growing every year. More branches are being brought in, more business correspondents are being brought in, more customers are getting enrolled, but still our priority sector lending money is happily kept as though it's a stockpile and then happily reported to the DFS, and the DFS is happy to give it back to NABARD, who collectively, if put together all the public sector banks, have a certain number of branches all over the country. NABARD has far lesser than that. What's the logic? Why should the priority sector lending money be coming back to the secretary? It should be in the ground with the people for whom it was meant. But that number is growing every year. You're happy to return it. And I would rather see the synergy between the NBFCs and the PSBs work together to the advantage of the customers who should get it that year itself. So when it comes back and then goes back to NABARD and then goes back to SIDBI, you've lost 6-8 months. Why should the customer at the end of the day, for whom the government is making these apportionments through the budget, not receive it that year itself, and then it gets carried forward into the balance sheets of other institutions who are only actually refinancing it? So there are areas in which the presence of the NBFCs should be more effectively used by the public sector banks. Recovery practices of the NBFCs must be fair, empathetic and respectful in strict accordance with the RBI's Fair Practices Code. Sensationalized reporting in the media, which they are right in reporting, I don't fault the media at all on this, where harsh measures are taken for recovery of a 500 rupee. Heartbreaking stories come out. I know for you it's important and it's part of your duty, but it's not part of your duty to be heartless. You need to have better fair practices code aligning with RBI's fair practices code. So the same message, the push for growth should not come at the expense of customer well-being. Let's be clear on that. So the long and short is deep collaboration between NBFCs and banks, especially through co-lending arrangements. We need to have effective ground level happening of co-lending activities. I've been talking about co-lending since the time I've come into this ministry. 6 years have passed. I would like to see more successes happening in co-lending. And partnerships. Such partnerships should be institutionalized and scaled up. Of course, the advantage of a account aggregator is available for all of us. Seamless digital co-lending architecture, common onboarding standards, and interoperable servicing platforms absolutely can greatly enhance credit flow to underserved sectors while ensuring risk sharing and efficiency. So please do sit together. I would like the public sector banks, each in your own state where you are the lead banks, to call the NBFCs of those states where you are the lead bank and talk with them to find out ways in which co-lending can be improved, onboarding standards can be bettered, and interoperable services platforms can function. So I would expect our public sector banks in the states where you are the lead bank to call the NBFCs and talk among yourselves as to how better you can work together and benefit the ultimate customer at the last mile to get the benefits of co-lending. So NBFCs, I want to tell you in front of the Department of Financial Services Secretary, you're no longer shadow banks. The stronger regulations and oversight is the best testimony. The stronger regulation and oversight is the best testimony of your importance in the financial system and the broader economy. Systemically significant NBFCs have also grown in size and complexity with governance and compliance standards comparable to our public sector banks. I think this marks a very important evolution where robust NBFCs can graduate to being banks, creating a continuum of institutional growth within the financial sector. I'll come briefly to an area which I'm sure many of you all have a lot of things to say. I heard some of it now, but I will still talk about it. Recent regulatory measures, such as the restoration of risk weights on bank lending and the easing of financial conditions, are expected to further improve credit prospects, strengthening the overall funding environment for the sector. So with the recent RBI's measures, reducing the cost of funds to the sector, I urge our NBFCs to pass on the benefits of this reduction on to the consumers, the customers. So you should give a serious consideration of making sure that this is passed on to the consumers. I assure you the government remains committed to supporting the NBFC sector by enabling a responsive policy environment. I want to assure the industry that we are committed to a consultative approach, and the issues flagged in the consultation with the NBFCs today will be examined with due attention. And I know some of you who were with me during the consultation have heard me say to the RBI that if they can consider a particular dedicated, let's say, one afternoon, once in at least 2 months or something, which they can find their best convenient time and calendar, they should keep an open house. It's not a compulsion for everybody to come. The NBFC should approach the RBI on those open afternoons. Voice your, if not concerns, what the ground reality is developing to be. Let the RBI be told by you all. Equally, any challenge that you're facing should also be expressed to the regulator. So if that happens at a particular time when the RBI has decided, once 2 months, once in 3 months, whatever they would decide, the consultative process will not be waiting for a Bharat Mandapam DFS sponsored meeting. It can happen literally on a regular basis with the regulator. And if there are issues beyond the regulator, DFS is always available. You can always send him an email or a telephone call, will be fine. And we'll take every bit of it seriously. So the road ahead, I would think the NBFCs, either on their own, together as a federation, or through the DFS, should have a vision for India. Should have a vision for the 2047 Vikasit Bharat. What exactly is your role? Where do you see yourselves? What do you think you can do? And for that, what do you need the government to do? I would like to hear a vision for NBFCs coming from the NBFCs themselves. And we are committed from the government to have a regulatory environment that supports innovation while ensuring that risks are well managed and customer trust is protected. So to achieve the Viksit Bharat goals, both the banks and also the NBFC lending must expand. I was saying when I was consulting with some of you all that India needs a lot more large banks. But India also needs a huge number of NBFCs to be present on the ground. And it is the large synergy that you will bring to the ground which can make up for very many more large banks which are yet to come in India. There are large banks, some of them are doing very well. But for making up for those large banks which are yet to come, I would think the huge 9,000 field force which is there of NBFC, you should give us that advantage, that catalytic advantage. So you currently account for 24% of the volume of credit disbursed by scheduled commercial banks. 24% is with you. So if you're 1/4 of the entire financial sector, your role is going to be much more in the coming days. And that is where I would think the NBFCs, at least for these sort of purposes, should federate among yourselves. Make a federation among yourselves and do the policy, regulatory, and also compliance and visionary consultation among yourselves and come up with something which the DFS can act on. You should aim to reach at least 50% of the total volume disbursed by scheduled commercial banks. Not a big number, considering in the last 4 years, you've doubled. 24 became 48. You can do it even now. So, as India moves forward, NBFCs will have a key role, no doubt, in meeting the credit needs of the future, including in areas like green initiatives, affordable housing, and MSMEs. To reach, and the reach that you have is the biggest strength that you have. By 2047, at least 50% of NBFC credit should be directed towards high growth and high impact sectors. Collaboration will be the key for it, whether through partnership among NBFCs, co-lending arrangement with banks, or integration with financial technology firms. Fintech firms are your friends. You should work together with them as well. So, technology should become the central pillar for all of your activities. NBFC should aim for 100% adoption of digital processes across the entire loan life cycle. This is actually an objective that I'll put before you. It is worth infusing it into your model of business. You should aim for 100% adoption of digital processes across the entire loan life cycle. And to enable this, there is a need to develop a minimum common technology standard for all registered NBFC. And I think the Secretary DFS should play an active role in getting a minimum common technology standard for all NBFCs. No point in each one of you all doing what you think is appropriate for your situation unless there is some kind of a common standard. The consumer or the customer is going to not get the best of services from all of you all. So, thank you for giving me an opportunity to consult, to engage, and also to share my thoughts with you all. And thanks for being here. I think the engagement should continue. I again request the RBI to make a provision for keeping an ongoing engagement with each one of you all. Thank you very much.